Okay, so EURJPY, JPY. Damn, sorry. Um, take a look at this. Take a look at these two entries back to back. No pivot order needed. No pivot points needed. Just price action and fib. So the first play is pretty obvious. We've got. Let me move this over. Oops, it's not what I meant to do. Okay, let's play right here on the 382. So this is the low that we reached. Let's zoom out real quick. Come on. Zoom out real quick. Major level that we had hit and had an opportunity to go up. This major level, sorry, down here. So we're not seeing it. Yeah, we are seeing it. So this is it on the monthly, where got like a, I don't know if that's called an inside bar. I need to brush up on some of my chart patterns, but we're right off of this, and that's where we're going to focus. So we're right off of that big red bar last month, coming into the next, and bouncing off of this key level. So I came up, equal highs, and then we pulled back. So this is good enough for me as a potential reversal, potential move to the upside. We broke the 50 EMA, and then we pulled back. Now, ideally, I would want to have a move down like this and then pull back or a move higher than the previous high. We moved equal to the previous high, then pulled back slightly. Not the most sound of entries. This is really like more of a rolling the dice type of thing, and so keep that in mind. It's not a good entry, but it is an entry, so I want to kind of talk about it. Equal with the previous, we pulled back, so notice how it's also not a good entry. The fact that we pulled to the 382 level, damn, 382 level, and we went past it. We went right past it to the 5, and then past the 5 to the 618, and then we spiked and almost got stopped out here. So we bled a ton on this play. Thankfully, it was only for a handful of hours, but yeah, it would have been pretty rough to be in this real time and to need to get all the way back here. Let me see if I can do this. It's not gonna let me do this the way I want to. Is it? Yeah, I don't think it's going to. Anyways, I gotta pay for that feature. There was a pullback entry, but it was so sloppy, and this is why price action needs to tell you what to do. I really need this to go up in this area. And what I'm talking about, just in case y'all aren't understanding, because I might not be doing a good job here. This area, pulling down from there, and then this pullback. So we measured from here. We needed to measure a pullback that was way like higher, like up in here somewhere maybe. Okay, so that would have meant that this entire situation, move this up, it would have been like this. So my entry would have been higher up, and it also would have been more momentum to the upside. My price action would have clearly shown that we're moving higher from here. We're not equal right here. We're higher with the price action. So we got higher highs. And obviously we have higher lows once it came back down. But I placed this order before we had higher lows. Hypothetically, I would have placed this order before I really confirmed that we had higher lows. So this could have just been like a up right here and then range bound and a double bottom or something. It could have just dropped right through. So this is super, super risky is what I'm getting at. Okay, so, but we got through this without dying on that one. 1.64. Was it worth it? No. 1.64. You do that for 1.64, you're tripping. There's no reason. There's no reason. There's so many more cleaner setups. But this is why it's so good to do this, is because I just took that trade without taking that trade. I just learned from this trade without having to actually, risk money to do it. And I can also now see clearly why it's not. This might be like a B or C setup, as opposed to an A setup being like up here and pulling in and having some momentum behind it. Now, the subsequent trade is actually a better play, and I drew this off of the next entry. I drew it off of, let me see here. I had an extension, and then I had this play right here. So I drew it off of the recent move up, and then called this a pullback. This is in, right? So this is the move that we're measuring. I said that wrong, but you guys know what I'm talking about if you know what I'm talking about. So this is the leg that I measured. It's from right here, so equal to where it was and rested, so the bottom to the top here, and that whole thing allowed me to have a pullback play right in here. A very, very, very low momentum pullback play, but my momentum as far as price action, we're moving upwards. So I'd like to have it more rigid and just boom, boom, bounce off like that with the sound effect and everything. But it's not necessarily going to do that, but it will. We will aim at this yellow line. Why the yellow line? Why am I aiming at that? Because it's two things in one. It is 50 EMA on the 1 hour chart, and it's also 20 EMA on the weekly chart. Now, what I've learned based on how the charts are set up and stuff, that a lot of times 50 on one is going to be 20 on another, and so on and so forth. As an approximation, okay? So I kind of learned that that's a good way to kind of look at it, and I think that's a decent profit target for this particular play. Is it the best play? Nope. Is it better than the previous one? Yep. But it's still a B. It's not an A. So even looking at this and realizing that, that's a gift right there, man. Just understanding what a B or a C looks like, and understanding also how to trade it if you want to trade it. You can trade it if you want. You're going to have to kind of suffer bleeding a little bit more, and also, just be prepared to risk your 1%. And yeah, MACD doesn't look good, so I probably wouldn't take this. MACD looks horrible in this trade. So there you go. It looks like it's about to roll over any moment here. I'm just gonna fall into the abyss. Anyways, that's that. Yeah, I might catch y'all with one more video. I might have one more in me. We'll see. All right, peace.